Hi everyone, it's a daily 10-minute business and finance news wrap for this Tuesday, the 14th of December 2021. We are going straight to the Australian share market, and although not much happened, the S&P ASX 200 pretty much flat, 7,378. That's what the headline says. But there was some news today, particularly CSL, after the share market closed. It confirmed it is making one of the biggest takeovers, Australian takeovers overseas, by paying $16.4 billion for a Swiss pharmaceutical company. One of the biggest movers on the share market today, though, was Woolworths, down 7.7%. It says COVID-related costs will amount to $150 million for the first half. So for more on that and the rest of the day's market action, I spoke earlier with Stuart Roberts from Stocks Down Under. Stuart, what's driving the market today?
Everyone's afraid about supply chain issues. So you've seen that Woolworths have had to absorb about $150 million in costs. Part of that was managing COVID and part of that was supply chain. So Woolworths is down heavily, and I reckon there's more where that came from. It's basically the payback for not having to suffer during the corona crash we had in February and March last year. Business has been great for Woolworths, but no one saw these costs coming, and that's why it's taken the market by surprise, the reaction to the news that Woolworths published this morning.
Can you tell us more about those costs at Woolworths, and is it something that we're going to see across the board and perhaps more into the future?
Wherever you go around the industrialized world, and in fact, not even in the industrialized world, there's inflation and there's supply chain issues. So just getting stuff into the stores is proving harder and harder. And Woolworths is a major supplier of all sorts of essentials. It's not immune to what's affecting all sorts of businesses, large and small. Now, Woolworths is an expert on running really good supply chain infrastructure from one end to the other. So it will come through better than a lot of its competitors, but it doesn't mean that it won't suffer. And I guarantee you, sometime in about January or February, you're going to go to the shop and you're going to see vacant spots on the shelves. Not necessarily in the toilet paper section, but there'll be something they'll be short of at some point, because everyone I'm hearing is talking about supply chain issues stretching well into next year.
Afterpay shareholders today voting in favour of its Square takeover, which will be called Block. What's the implications?
So the Afterpay Square transaction, I reckon, is probably the biggest deal of the decade. We're talking $39 billion homegrown technology innovation that's now spreading out around the world. So it's proof to me that the Aussie tech entrepreneurs have the right stuff in terms of what they're creating. To me, the significance is who's next. There's about 5 or 6 companies that could be the next Afterpay that people like me are going to look for now.
Bitcoin is being slammed of late. What's your take?
So there's a reason why people have been buying Bitcoin. The world's supply of money has been growing out of control pretty much since the pandemic began. And that means that there's going to be inflation. People are looking for some sort of store of value. And it's kind of easy to get yourself set in Bitcoin. And as a store of value, it's great because there'll only ever be 21 million Bitcoins. But I've got news for those people who are thinking that this is going to be the solution. The original crypto that I'm telling people to take a look at has been around since 10,000 BC. It's called gold. And the price of gold has barely moved compared to where Bitcoin is going to. But people have been buying gold a long time before they even heard of Bitcoin. And I predict that 2022 is going to see a big rollback in the price of gold. Remember, mid-2020, it went over 2,000 an ounce. We at Stocks Down Under are expecting it to get back there sometime next year.
So speaking of 2022, looking into your crystal ball, how do you see the right way to invest?
Gold is obviously one thing to be paying attention to, but the sector that's got me really intrigued is childcare. We're going to have a federal election in the middle of next year, and Labor are going to be running heavily on a platform of improved access to childcare. That's got to be good for companies like G8, for example, and other childcare, who I think are going to be big beneficiaries of the changed environment for childcare that we'll see.
And given this is the last time we'll likely be talking this year, can you tell me what you think is the key markets-related news story of this year?
I think it's COVID, because COVID has led to a step change in the way investors look at healthcare and biotechnology stocks. It used to be, I used to have to explain to everyone, what does mRNA stand for? Because I never met anyone who paid attention at high school to that sort of stuff. Now the whole world knows what mRNA does. There's a reason why Imugene, ASX IMU, is a multi-billion market cap company now, and that's COVID. Now that investors have done their education, the next few years are going to be great for those kind of companies.
Stuart Roberts there from Stocks Down Under.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.